Hi, everyone. Welcome to Networking Action. My name is Roni. Today, joining me is Darrin LeRoy. He's a health insurance agent here in Houston. Hi, Darrin. How are you today?
Very good. How are you?
I'm excellent. All right, so let's jump right in. I have a lot of questions to ask you. So first of all, can you just tell us a little bit about what you do?
Well, I am a health insurance agent. I specialize in underwritten coverage. It's kind of the old school health insurance that people loved before everything went, Affordable Care Act, marketplace, Obamacare type. It allows you to stay on the plans till you're 65 years old. It underwrites your coverage. Because generally fairly healthy people get on the plans in the first place, the benefits are incredible, and you're allowed, and they basically stack it up on that. And yeah, it's basically what I do. I also advise on other people's policies. So if you are on a marketplace policy, or you're on a group policy that may have changed because they want to save on costs, so you have high deductibles, I can review those and let you know where the holes are in the plans, because every plan has holes, and a lot of times they're not obvious. So that's what I do.
Absolutely. That sounds really cool. So what is basically the main difference between, let's compare Obamacare. We said that, right? So between Obamacare plans and the plans offered through you.
The biggest difference is that Obamacare plans are what are called guaranteed issues. They allow for a lot of pre-existing conditions, but the mistake people make is they think, well, they allow for pre-existing, so everything's going to be covered at 100%. That's not true. There are percentages of coverages built into those plans. Their risks are limited, and in order to compensate for the what I would consider exorbitant amount of claims that those plans have to pay out, you have very high deductibles, and the co-insurances are minimal, 60-40. Some plans are 50-50 after deductible, and then you have them out of pocket. So the difference is that on my plans, you get underwritten once. Okay, they do a pretty deep dive in the medical history, and if there are certain pre-existing conditions that they accept, and if they accept you, they accept all of you forever. So the plan's not going to change. You're not going to get dropped. The coverage is what the coverage is, and this is what it does, and that doesn't change. There's also many ways that the biggest thing too is that my plans are true PPO plans. Okay, which means you can go to any doctor, any hospital, you have benefit in and out of network, and they're accepted across the country. Whereas Obamacare plans, like if you're in the Houston area and you're on Obamacare, you're not going to MD Anderson if you have cancer. They accept none of them. If you have a child, none of the children's hospitals accept it. Texas Children's, Methodist Children's, none of them accept Obamacare. You're basically going to, Ben Taub, LBJ, or Cypress North if you have a hospital, and only 2 or 3 plans are accepted on Memorial Hermann and Methodist. So the lack of options is one of the biggest differences. And also, when you want to go, you want to go. You want to make sure you're covered. On a bronze plan for Obamacare, minimum, your deductible is $8,000 for an individual. And then once you meet that, your max out of pocket is another $8,000. So unless you can scratch a $16,000 check plus your premium, you're going to have a hard time. Whereas my plans will actually pay those deductibles and max out of pockets for you.
That's very interesting. Very interesting. So do you have like a favorite customer story for us? Somebody you really helped a lot, or?
I do. I had fortunately and unfortunately, I use her as an example even in my presentations, because I present like this. We don't do over the phone. I don't do over the phone. I do a Zoom. We may not use the cameras, but so you can see the policies and we can go over them. We can do scenarios. I'll bring up EOBs that are redacted from past clients and say, this person broke their leg. This is how it played out. So you have an understanding of what's going on. But my favorite one is that I had a 38-year-old lady that was on our plan for 4 months, just 4 months. Her premium was $356 a month.
Okay.
She was on the plan for 4 months, and she was diagnosed with stage 3 breast cancer. Okay. Because of how the plan was built, okay, one, she got to go to MD Anderson, and she received over $500,000 in care. 2, because of how the plan was built, it was internally supplemented for critical illnesses and accidents and things like that. It's all under a single premium. Her critical illness supplementation kicked in and paid her $57,000 in cash. And then there's a hospital confinement benefit of $800 per day. So she was diagnosed in January. She was going through treatment the entire year. She used all 30 days of her hospital confinement. So she had $56,000 from the critical illness. She had $34,000 from the hospital confinement. Okay. On top of the plan covering at 100%. She told me she made more money being sick that year than she's ever made in her life. Our company not only covered $500,000 worth of bills, she got to go to MD Anderson, but she made tax-free $83,000
Wow.
from her policy. You're not going to get that on Obamacare. You're not going to get that on a multi-plan PPO. You're not going to get that on short-term health insurance, which is are offered individual plans through United Healthcare and individual plans through Aetna or Humana or Aspen or limited benefit. So I build plans that are three-legged stools. You can stand on them. You're not going to fall down, and they're going to make sure you don't go bankrupt.
That's amazing.
And so she got completely covered, and not only did she didn't miss a beat. Kept her house, kept her car, lived her lifestyle the way she wanted to, and not have to worry about it. And she had me as her personal agent. So as the bills and things were coming through, I was checking to make sure everything was going correctly. And that's the other part that I do. It's like you don't have to call 1-800 I don't know you and have them figure your life out for you. You have my cell phone number, and I handle it.
Nice. That's excellent.
That's
That's
one of my
amazing story.
favorite stories. I have several.
Is she feeling better?
Oh yeah, she's perfectly fine, completely recovered.
Has COVID-19 affected your business?
Believe it or not, it has improved my business because people walk around with a sense of immortality a lot of times.
Yeah.
I can't tell you how many people I talk to on a daily basis and say, I never go to the doctor. I'm fine. I'm this, I'm that. But what people refuse to understand, or not refuse, but don't conceptualize, is that when it comes to particularly health insurance or any insurance product for that matter, it insures against future risks, not today's risks. Like you can't get in a car accident, call up your agent and go, I need collision, not just liability. It doesn't happen. They're going to go, you're insane, and click. So health insurance kind of operates the same way, is that you're paying us, the insurance company, 300, 400, 500, whatever it is, in order to take that risk from you.
Yeah. So
a lot of times, because it's not an immediate risk to them, they don't, oh, well, I don't need it. It's a waste of money. Okay, yeah, you're fine today, but you could step off the curb tomorrow and fracture your ankle in 7 different spots. And I'll tell you right now, an ankle fracture with pins, bolts, and screws, $47,000 to $50,000 cash. Easy. So would you rather pay that, or would you rather pay $500?
Yep. No, health insurance is a necessity.
Yeah. So when it comes to like COVID, that was brought everyone's mortality back to their attention. Okay, there's this airborne thing floating around that could be nothing, or it could be extremely expensive. Because the minute they pop a ventilator in you, now you're getting into the 6 figures in doctor's bills, and that's where insurance comes in. And health insurance is not for a wellness visit or I have a cold. Anyone can pay cash for that kind of stuff. $300, $400 once a year, boom, you're done. It's for the stuff that happens that you can't handle.
Yeah.
That's why you insure. That's why you insure your business. That's why you insure your car. People even insure their phones, for Pete's sake. But you talk to them about health insurance and they're like, oh, that's super expensive. Oh, I don't want to. We're talking about your body here, people. You can get a phone, you can get a car, you can build it, you can move your business to another building. But this shell is the only one you got. It's the only one you're ever going to get. So you want to make sure that A, you can take care of it, and B, the process of taking care of it isn't going to bankrupt you.
Yeah, absolutely.
And it can and it will. And that's how COVID, it has brought the realization that people need to get on health insurance. And if you have to do it, it's the best time to do it is before things happen.
So another question with COVID. So it's been you know, a lot of people, you got furloughed, a lot of people lost their job, a lot of people lost their coverage. Have you seen an influx of, you know, people coming from, you know, that world? There's people keep talking about Cobra. I'm a business owner, so I don't deal with this kind of stuff, but have you seen more of those people coming in towards you, or
Oh,
they're running to Obama?
no, definitely, because what they do is they first thing they do is they say they get their Cobra notices. And what people don't understand is Cobra isn't what you were paying. Cobra is what your contribution plus what the company was paying.
Yeah.
Okay. Now the company by law is mandated to pay minimally 50%. A lot of times they pay 70 to 80. So
Mhm.
the sticker shock they get, you know, I have a family of 5, I pay $400 a month. They get their Cobra notice, they realize it's actually $2,400 a month because the
Yeah.
company was picking up that 2K. So they're like, oh, I'm going, and they go out and they get on healthcare.gov, you know, and they say, okay, you may qualify for special enrollment, but now you got to put in your estimated 2020 income. Well, they've already worked 3/4 of the year. They could have made, you know, on paper, you know, $160,000 or $100,000, $80,000. They're not going to get a subsidy.
Yeah.
So then they're like, okay, I can get this HMO, pardon my language, garbage through the marketplace and pay, and I have to pay, maybe it's not 2,800, maybe it's 1,700. They're like, that's ridiculous. I can help them.
Mhm.
I can help them because of underwritten coverage is generally cheaper because they know they're bringing in less risky people.
Okay.
Okay. So, and then they group those healthy years people together, and that's how they make the group, and they use that. So I help lots of people that are in those positions. I have since April, since this thing started falling apart for folks. And
Nice.
it's
All
it's
right.
and my plans aren't a contract, so it's not like you have to be on it 12 months.
Yeah.
After 90 days, you know, you end up getting another job, or they call you back and they reinstitute your benefits or whatever. Great, no harm, no foul.
Yeah.
But you
Well,
can hang on to it too, till you're 65, and a lot of people do.
nice. All right. Well, Darren, this kind of concludes our interview.
Okay.
Thank you so much for your time. Just tell us before, you know, we leave, how can we reach you? I see that you can really help a lot of people and you have the great, you know, spirit. So how
Thank
can we
you.
reach you?
My cell phone number is 734-931-2100. And my email is agentdarrin@gmail.com. So
Perfect.
AGENTDARRIN @gmail.com.
Awesome. All right. Well, Darren, thank you so much for your time. I appreciate it. Thank you, everybody, for watching.
Thank you.